What is good, everybody? Welcome back to another live stream. This basically sums up the market and price action and everything pretty well. Got Bitcoin price plunges below 67,000. Crypto market sees 426 million in liquidations. So where we are at right now with the price of Bitcoin is just above $65,000, $65,305 right now. Now, the interesting thing about Bitcoin and this whole market right now is we're in a time where we've got less and less media coverage. Price itself is in a weak position, yet we are in the most historic month in Bitcoin's entire history, being the halving month, right? The halving event for Bitcoin is only a couple of weeks away, like 2 weeks away, 2.5 weeks away. It's not a lot of time at all. Now you can see that on one hand, you've got a list of negatives. On the other hand, you've got a massive positive. So this should be ringing alarm bells right now in your mind that something is most definitely coming for Bitcoin. It's not a coincidence that price is weak. It's not a coincidence that media coverage has dropped off a cliff. It's not a coincidence that the halving event is only a couple of weeks away. And that being said, that's a massive opportunity for yourself to get in position for what is coming for Bitcoin. And it is going to be great. It most certainly is going to be great. But before it gets there, before we see the price of Bitcoin double from the level where it's at right now, I want to let you guys know that we will be seeing 55 to 57,000 in the price of Bitcoin. And a little later, I'm going to explain to you exactly how we get to that 55 to 57 price range, because it is coming. It's only around the corner. So 65,000 we're at right now. We have got some room to the downside. But as I said, I will be explaining that. Now, a lot of you guys at this point in time will probably want to know what is happening to the price of Bitcoin. Why is it 65,000 and why is it not 75,000? So why is it in a position of weakness and what you should be doing about it? Now, there are really only two reasons why we're seeing the price where it's at right now, at 65,000. There's only two reasons why we've seen price go from 73,000 at its peak to its current price level of $65,000. So if you're able to understand these two reasons, it's going to put you in a very good position to have a very good outlook of Bitcoin and then how to actually approach it and then do very, very well for yourself. The first reason, and this is in no order, but the first reason of why we are seeing weakness in Bitcoin, why we're seeing a 65,000 handle in the price, is because of Grayscale. Now, if you don't know, Grayscale is one of the spot ETFs that were launched, I should say, beginning of this year. They have done very well. But Grayscale is unique from the other spot ETFs in the sense that it's a legacy vehicle. So it was around before all the others. It wasn't in the format of a ETF. It was in a different format, allowed certain investors exposure to Bitcoin. Then they converted to an ETF. Then 9 other ETFs launched on the stock market, which gives certain people, well, it gives everyone, depending on where you are, easy access to Bitcoin through the familiar stock market. The difference with Grayscale and the other ETFs is, number one, they started their ETF with billions and billions, like $30 billion worth of capital. And that was like over 600,000 Bitcoin, roughly. But then also because they had that monopoly position in the market and all the others were fresh and they were just starting to get inflows, it meant that they could charge really high fees. If you're the number one player in the game, if you're the largest, you often are able to charge the most. And that's what they did. They had a 1.5 fee. That might not sound a lot, but when you're dealing with millions and billions, that 1.5 fee turns out to be a lot. So instead of paying 1.5 to Grayscale, the investors have gone to other providers like a BlackRock, like a Fidelity, that have zero fees. So do you want to pay fees or do you not want to pay fees? It just makes sense to go to those that don't have any fee attachment to their investment vehicle. So because of that, every single day since the launch of the ETFs, so back in January 11th, you've seen those that were previously positioned in Grayscale selling out in their billions. So they've lost like half of their fund. Their fund used to be 30 billion. Now it's like 15 billion. They still control 300,000 worth of Bitcoin. So it's still a lot. But you can see on the chart, all these red bars. This is just the amount that is coming out on a daily basis out of Grayscale. And yesterday they clocked 300 million of outflows. To put that into perspective, that's like 400,000 Bitcoin. I personally like working in number of Bitcoin rather than outflows, because like not many people can process or handle 300 million in their brain. But if I said to you they sold 400,000 Bitcoin out of 300,000, it puts things into perspective. The thing here is, as long as they continue to sell out of their fund, it is a negative. It's a negative catalyst for Bitcoin and the market. But here's the thing: once they stop selling, or once the selling slows down or moves to a minimal, I don't think they're going to have any net positives though, just because of fees. I mean, you'd be crazy to put money in here when you've got others that are charging 0%. Then that negative catalyst turns into a positive. So right now the market is getting hammered because of this negative catalyst of outflows from Grayscale. But that's only for a limited time only. That's only for a short time. That will change. That will flip. And that negative will become a positive, because now you don't have the headwind of outflows coming out of Grayscale, and you're going to get to a situation where you just have fresh capital coming into the ETFs. So it's a negative catalyst right now, but it can only go on for so long. They only have 300,000 Bitcoin. At the rate that they're going, their entire fund will go to zero in about 100 days. That's not long at all. That's 3 months. It's not likely that it'll go to zero. There'll probably be some reserve capital in there. They might hold 20%, 15%. That will be more sticky, won't really move for whatever reason. You know, some of the owners might own it. Some people, might have whatever, right? For whatever reasons. But they still got a fair bit of selling to go. They own 300,000. That 300,000 will probably go to 50,000, right? So they've got another 250,000, rough numbers, that will exit from their fund. And as that money comes out, that is a headwind for the market. But as I said, at this rate, they've only got 100 days till their fund goes to zero. So that's the maximum amount of time that, the selling will resume for Grayscale. There doesn't look to be any slowing down in the rate at which they're selling. It seems like they're selling off 2,000 to 3,000 Bitcoin every single day. That rate, there's no indication really that is slowing down. But as I said, they've got a limited amount of time that they'll be in this situation, only 100 days, and their fund will go to zero. That's the key thing. Now, once you understand that, then you got to realize that there's 9 other funds, 9 other ETFs with better reputation, BlackRock, Fidelity, They're more well-known names with asset managers, with investors versus Grayscale. Not many people have heard of Grayscale, but a lot of people have heard of BlackRock. A lot of people have heard of Fidelity, and those are where people want to put their money. Now, those funds have been effectively buying all the outflows. So all the Bitcoin that they've been selling off from Grayscale has been bought up by BlackRock, by Fidelity and the others. But in a time like this, when we're so close to that historic event taking place in 2 weeks' time, the market right now is in a pre-event pause. A pre-event pause, a pre-halving pause. So that means that because we're so close to this halving event, which is taking place in like 2 weeks' time, most people don't want to be making big moves. Most people just want to be watching. Most people want to get this news event out of the way, and for very good reason. And I'm going to go into that in a minute. So we're in that pre-event pause. Because we're in a pre-event pause, how can we expect BlackRock? How can we expect Fidelity how can we expect the investors who are using those asset managers to want to buy and take on all the outflows from Grayscale? How can we expect them to want to buy Bitcoin right now in the market when it makes sense for them to wait, get the halving event done and dusted, get out of the way, and then they can resume buying? Then they can get their positions. So because we're in that pre-event pause, it means that we've mainly just got the headwind effect of the outflows from Grayscale. That's it. We don't have that tailwind, that positive, that buying impact from the BlackRock and Fidelity. Someone actually put a question and said something along the lines of, if BlackRock are owning so much Bitcoin, they're buying all the Bitcoin, isn't that a negative thing? Something along those lines. Aren't they controlling all the Bitcoin or whatever? They're not. The BlackRock aren't buying Bitcoin. They have allocated some to their personal vehicles, but the majority, 98% of it, is just coming from asset managers not affiliated with BlackRock, individuals not affiliated with BlackRock, hedge funds, pension funds, using them as a vehicle. That's it. They don't actually own, it's not BlackRock's Bitcoin. It's for their investors. So they're one step removed. They are the platform that's allowing the investors, the asset managers, to get access to it. It is not in ownership. It's not in control of, BlackRock aren't in control of the Bitcoin, right? It's not them. They don't own 1% of the supply. The investors, the asset managers, they own the 1% of the supply. So you want to understand that dynamic as well. So right now we just got a headwind. We got no tailwind because we're so close to the halving event. Most people have pushed pause on their activity, and it makes a lot of sense. Okay, so that is the number one reason why we're seeing weakness in the price of Bitcoin. It's not for any other major reason. The other reason why we're seeing weakness in the price of Bitcoin is simply because when it comes to the halving event, there are 3 phases, okay? You get the pre-halving phase, you get the post-halving phase, and then you get the phase after that. So anything after that, the extended move, the bull run, whatever you want to call it. We're in phase 1, pre-halving phase. So because this halving event takes place every 4 years, we got a lot of data to look back and see how prices actually moved and reacted and what's the impact been of the halving situation. This halving event is most like 2016. A lot of people are looking at 2020. The dynamic isn't the same, isn't as similar as it is to 2016. The dynamic we're seeing right now is more similar to the halving event that we saw take place in 2016. So if you want to have a good idea of how price is going to move in a predictable way, it's 2016 you want to be looking at. We're going to look at it right now. White line is the halving event. This is back in 2016. If you saw, we had a push lower, right? A 25% drawdown from peak to the trough into the halving event. Well, sounds very similar to what we've got going on right now. We saw price move to what? 73,000. That was the peak. Then we're seeing price move as low as 60,000. I think last week or week before, as we move into the halving event. Very similar to what we're seeing right now. The good thing about the market is we've got a lot of data we can use in our favor to make the right moves and the right decisions, calculated moves, calculated decisions that are very, very beneficial, very lucrative. Okay, so that's phase one, very similar to what we're seeing right now. Makes a lot of sense. Why did it happen in 2016? Well, it was a pre-event pause, same as we're seeing right now. A pre-event pause on all operations, a lot of people's operations regarding Bitcoin. Same situation. So let's take a look at the post-halving. Okay, so post-halving in 2016, what do we see? We saw a further decline of 30%. We saw a further decline of 30% post the 2016 halving event. We're not there yet, but I'm just building a picture for you guys of why we're going to be seeing 55,000 in the price of Bitcoin. So we had this dual leg lower. First was pre-halving, second was post-halving. We're seeing a very, very, very similar picture take place right now in the price of Bitcoin. But the more exciting news than that, right, is what happened after. If you look, I can't even show you the whole chart on this screen. It'll be too small of where price went. You won't be able to see it. Price from that low moved up hundreds of percent, right? That was 500% that I put on the screen. 500% move from the low. So that what was that? That's the third phase after the halving event. I'm not saying price is going to move 500% from here. I am saying price is going to move a lot though. I am saying price has a easy opportunity to double from the low. Remember, more than that from the low, and the low should come in at about 55 to 57,000. So 3 very well defined phases, and that's exactly what we're going through right now. So you're not going to hear much information on this. That's the whole point. The market isn't designed to give you the right information. It's designed to confuse you. It's designed to bamboozle you. It's designed to take you out of your position. It's designed for you to make the wrong moves. But with the right information, you can make the right moves, put things into place, and do very, very well for yourselves. With this information, you can set yourself up extremely well to take advantage of what is going to take place over the next couple of months. Now, this is something I've been speaking about for a while now. When Bitcoin was at 73,000, I did tell you we are going to see 55 to 57,000. I haven't changed my outlook, haven't changed my story, haven't changed my prediction. It's all the same. Been saying this for a month, for the year. I've been saying this. Now you're starting to see it take place. Now you're starting to see it play out. So that being said, if we are going to see a second leg lower. That is what will take place. But that's after the halving event. The halving event is 2.5 weeks away. But before I get into the technicals and show you how the chart is setting up for a $55,000 to $57,000 Bitcoin, let's take a minute, just step back, talk about what the halving event is, right? So you're very, very clear on this. The halving event is, without a shadow of a doubt, the greatest event in Bitcoin's history. It's what separates it from every single other asset class there is in this world, whether it is your fiat currency, whether it is your gold, your precious metals, your stocks, your index funds, whatever it is. This halving that is built into the mechanics of Bitcoin is a very, very unique structure that will give it the opportunity to continue to climb for your lifetime. Right now, every day, there are 900 Bitcoin that are released into the market. 900. That 900 is easily being consumed. Easily being consumed every single day by the ETFs alone, multiple times over. So what do I mean by that? I mean that on behalf of the investors, the asset managers, the pension funds, the hedge funds, the boomers that are buying Bitcoin through the ETFs, they are buying way more than 900 Bitcoin every single day. I think the average is like twice as much. Okay, twice as much they're buying every single day, let alone the rest of the market. So that means we are in a demand shock environment. If you want price to explode, if you want price to go higher, you want two things to happen, or you want one of two. If you get two, even better. Both together, even better. You want one. Number one is demand. You want more demand. The more demand you get, the more price goes up. So I've got like a pen on my desk, right? This is super cheap. This is probably like 50p. Or if you're working in dollars, it's like 50 cents. It's so cheap because they make so many of these. Now, if for whatever reason we had some sort of scarcity and there were only 100 of these pens in the world, it wouldn't be 50p anymore, because people would be fighting to get their hands on this pen. It'll be way more. It's the same thing with Bitcoin. There is this 21 million in total circulation with Bitcoin. I think there's about 19 million that has been created. There's maybe like another million or less than that will be created over the next 100 years. So beyond our lifetime. Every 4 years, that the amount of new Bitcoin that comes into circulation gets cut in half. So 900 are released every single day now. That 900 will go to 450. Bear in mind, the ETFs alone are managing to buy double the amount of daily new supply of Bitcoin. So that double will turn into quadruple and more. So you've got this demand explosion going on right now. And now we've got a supply shock that's coming in. You've got a supply shock coming in because you're only going to have 450 new Bitcoin coming to market, but you've got more demand. So the demand and the supply is just like out of equilibrium. So much demand, not enough supply. Those two things create massive price moves. So that is what is to come. That's why in 2016 you saw price go up 500%. It's that dynamic that's built into the Bitcoin mechanics. So you got the supply shock coming, right? So that's something that is unique and something to look forward to with regards to the halving. You've also got the fact that it raises awareness of, number one, the limited supply dynamic of Bitcoin, and more people are holding onto Bitcoin, right? 30% of Bitcoin hasn't moved in 5 years. When you actually process that and realize that number's increasing over time. So by the next halving event, it won't be 30%. It'll probably be like 40% hasn't moved. By the next halving event, it'll probably be like 50% of the supply hasn't moved. That's a big deal. People wake up to that, and then they start reacting to that by getting a position in Bitcoin, by understanding that while Bitcoin is climbing and becoming more scarce, the dollars in their pocket is becoming weaker and weaker. So to combat that, they're going to have to do something. Well, the smart people are anyway. But more and more, it raises awareness of this situation. So then you're going to start to get more and more media coverage. More and more people are going to start to realize this. If you know this now, you're part of a special group in the population that know this. Not many people in the world understand this. But you watching, you understand this. You're a part of a very, very select group of information that has such key information. And you want to make sure that you utilize that information to your best of your advantage. Thirdly, the big thing when it comes to halving, which isn't really spoken about too much, but is a very good thing to have, is the security of the network improves every 4 years, okay? Because it becomes harder and harder to mine back in the blockchain, etc. That increases the security of the blockchain. That's something that's not really spoken about. So you get these three things. You get the supply shock, you get the raised awareness, and you get the increased security. Let's take a look at the price of Bitcoin right now. So Bitcoin currently standing 64,900, getting lower. Let me explain to you guys why we're going to be hitting 55 to 57,000 in Bitcoin. So if I scale out, look at the weekly, in fact, look at the daily. What you'll notice is we got this dual peak situation going on right now. So we had this first peak over here at 73,000. We got this second peak over here at 71,000. Now, what you'll clearly notice is the second peak is lower than the first peak, okay? So what the market did is it failed to break the previous high. When you have a situation where you get this twin peak situation after a massive run and you get a failed break of the first peak, that is a very clear sign that you have got exhaustion in the market, okay? So you can draw that out. You've got exhaustion in the market. And if you get exhaustion in the market, that often leads to lower prices as price can't sustain that momentum, right? So that dual peak often leads to a lower price situation. That's the first thing you want to take note of. A clear failed break of that previous high. If we go down to a lower time frame, there's another thing setting up here as well. We have a trend line forming here. Now, what a very amateur thing to do, a lot of new people in entrance into the market, when they see trend lines, they'll take long positions off the trend line. So I can imagine there's a lot of leverage traders out there right now that will be gearing up to take a long position from this move here because it's on the trend line. The problem is trend lines often break, right? Often break. It's just one of the built-in mechanisms of the market to liquidate a lot of people, take people out of the market. If you want to see the last time that happened, I did speak about this. It was up here. Okay, you had this clean trend line, and what happened to price? Well, it broke and moved lower. From the break of the trend line, it moved 10% lower. We're forming a very, very similar situation on a bigger price move right now. This is just you'll see this all the time. So what price is very likely to do is this. In fact, before I get onto that, all these lows, you're going to have lots of buildup of what we call liquidity. So a lot of long traders are going to have jumped in at these points in time. They act as a magnetic force in the market. So the market often likes to sweep them out of their position. That's exactly what happened up here. It's exactly what's going to happen down here. Now, when the market does sweep them out of their position, where does it go? It's going to go lower. I said 55 to 57. Why did I say that? Well, it's using a technique of what I call multi-layered Fibonacci, right? Sounds super geeky and nerdy, and it is. But it makes a lot of money. So if we take a peak to a high, let's just clear this. Multi-layered Fibonacci is about taking multiple peaks to highs, troughs to peaks rather. So if I take this low down here, set up my Fibonacci, I can see that once I clear this lower level here of liquidity, I come down to this level down here, this 78% retracement level of 56,000. So 55 to 57,000. If I extend that Fibonacci to the next relevant low, again, I get a 50% retracement this time to where 56,000. That's where I'm getting my 55 to 57 from. And I've satisfied the market by sweeping that liquidity that was built up on these two market drawdowns, one at 59,000 and the other not too long ago at 60,000. I do it again. I go down to another relevant low, okay, where the rally started, and what happens this time? I get a 38% retracement down to where, again, 56,000, so 55 to 57,000. That's where I'm getting the figure from. Because you get that multi-layered approach, it means that whatever price point, remember, and I'm going to show you guys something in a minute. There's still a lot of cash floating around in the market, okay? I think there's like 6 trillion, something like that. That number rings a bell. Because there's so much cash floating around in the market, there is no shortage of money to buy assets. Risky, I'm not going to call it a risky asset, but there's no shortage of buying high yielding assets. No shortage whatsoever. Because you've got no shortage at all, and that won't change for a while. It means that there are buyers ready and waiting on the sideline to get in on dips. And one tool that they use to get in on dips is what I've just shown you. So regardless of what point you apply this on the charts, it's all indicating to the same level. When it does that, that's when you get very powerful reactions. If there are two charts you want to take a look at, one has got to be this. It's got to be the on-chain metric. So basically, it's just showing you. Let me move myself out of the way. It's just showing you how much Bitcoin has moved from storage reserves to the exchange. And why would it move from storage reserves to the exchange? For one reason, in preparation for sale. If we look at the 2021, 2022 tops of the bull market, which came in at just under 69,000, we had an explosion in on-chain volume, transfer volume. So loads and loads of people moved Bitcoin from storage and wallets to the exchanges to do what? To sell. And what did they do? They sold. And then you got a 78% drawdown in the price from 69,000 all the way down to $16,000. What's the situation we're in right now? We're not seeing that movement of Bitcoin onto exchanges. Nowhere near, right? Nowhere near. So that means that the market isn't prepared to do what? To sell. It's a very, very different situation we're in right now. Even though price is very close to where it was at the peak of the last bull market, 2021, 2022, the holder plan, right? The Bitcoin holder plan is very different to what it was. It's a very different environment to what it was. And this on-chain value clearly shows you that. So an expectation that price goes from here, this is 65,000 down to, let's say, 40,000 or 35,000, doesn't make any sense whatsoever. Doesn't make any sense whatsoever because the market isn't prepared for that. We don't have the volumes on the exchanges to do that. Very, very different. So it means that we are in a strength position. We are geared up for movements higher, not lower, higher. Bear in mind, 55 to 57,000, yes, but we're not geared up for 60% drawdowns or 50% draw, anything like major move. We're not geared up for that. That's not the environment. The second one is the amount of stablecoin on exchanges has exploded. So basically the amount of cash on exchanges ready to buy cryptocurrency has rocketed. So that means that the market is in a position to do what? Buy, not sell, buy. The market is stockpiling reserves, and the market has the firepower, the capital, the currency it needs on the exchanges ready to buy. And you are going to get that explosive buying. So I'm just building a story for you guys, a picture for you guys. And again, just reiterating what I always say of where we are at right now and how we get to the $100,000 in Bitcoin, how we get to the 125,000 in Bitcoin. This is how we do it. Now, if you simply just, try and get information from Google or look at cryptocurrency news, all you're going to see is things like this. That's what you're going to see. Price of Bitcoin plunges below 67,000. That tells you absolutely nothing. Doesn't tell you anything. The value you're getting from that is zero. In fact, it's negative because it's going to make you make the wrong move. 100% negative. So bear in mind, the dynamic, the market that we're in right now is unbelievable for cryptocurrency. When you're able to understand what's happening right now, when you're able to understand layers beneath the price of what's going on, so on-chain activity, the amount that's in storage, the fact that we're not seeing transfers from wallets and storage onto exchanges, when you're able to understand the value of stablecoin, the value of capital that we've got on exchange ready to buy, and the situation we're in, you got to be making moves. You got to be putting yourself in position, because the worst thing you could do is understand the information, make the wrong move by either selling or not making any move whatsoever. So it's definitely a very, very good time right now. The best time is often when the media is not talking about it, things have gone silent, and price has gone weak. And that is exactly the situation we're in right now. So make sure that you put yourself in position so that, yes, when Bitcoin is $100,000, we can celebrate. All right, guys, I will catch you on the next live stream.